Hey, what is going on, everybody? It is me, Attorney Hattie Hart, and today we're talking about how to report your cryptocurrency transactions. Before we explain how you report them, let's quickly summarize what those transactions might be. Typically, they fall into the following categories. Number one, when you are selling cryptocurrency for fiat currency, US dollars, euros, any local denomination. The second type of transaction would be exchanging cryptocurrency um, from one crypto to another. You're selling your Bitcoin and you are exchanging it for Ethereum. That is a taxable transaction. The other type of taxable transactions include when you receive income for providing goods or services in cryptocurrency. So if you're painting someone's house and they decide to pay you in Bitcoin, then you're going to need to report that receipt of Bitcoin for painting the house as ordinary income on your tax return. So if you are running a business, that may be on your Schedule C. And so that gets reported directly on your Schedule C. Moving forward, you're going to have a tax basis equal to the amount that you reported. The amount that you reported is typically the fair market value on the date of receipt. So when you do have a taxable transaction and you need to report it, you're going to need to know a few things. You're going to need to know the date that you acquired the cryptocurrency and the amount that you paid for the cryptocurrency. That is critical because that's going to determine how long you have held it and subsequently what your tax rate is going to be, because you can hold cryptocurrency in the short term for less than 1 year and pay 1%, but if you held it for more than 1 year, you can get a more favorable tax rate for long-term capital gains. So having the date that you acquired the cryptocurrency is critical. Secondly, knowing how much you paid for the cryptocurrency is also critical. That is going to determine your tax basis. That's how much you've invested, how much skin you have in this cryptocurrency. Because when you sell the cryptocurrency, you don't want to pay tax on what you've already paid for the cryptocurrency. So to give you an example, if you bought one Bitcoin for $30,000 today, and you've held that cryptocurrency Bitcoin for more than a year, and you sell it later on for $50,000, because you've held it for more than a year, you're going to be getting a favorable tax rate. And because you know how much you paid for it and have you documented how much you paid for it, you're going to be able to pay tax only on the difference between the $50,000 that you sold it for and the $30,000 tax basis that you bought it for. So you only have to pay tax on the $20,000 of gain, and because you held it for more than a year, it's going to be a long-term capital gain. Now, back to the fundamental question, how do we report cryptocurrency transactions? Well, you report it on IRS Form 8949. That form gets attached to your tax return. And on that form, you're going to list each individual trade, including the date you acquired the asset, how much you paid for the asset, the date you sold the asset, and how much you received in selling the asset. And finally, you're going to have a gain based on those figures that's ultimately going to get taxed on your tax return, depending on whether it was a short-term gain or a long-term gain. You're going to aggregate all those individual trades that you recognized on Form 8949, and you are going to add those to Schedule D. Schedule D is where you report other capital gains and losses. So that is the gist of what's going on with reporting your cryptocurrency transactions when you sell it and when you exchange it. Now, if you receive income for goods or services, again, that's going to be reported on your Schedule C. Another final way to report transactions, a taxable transaction, is when you purchase goods or services for cryptocurrency. When you are purchasing goods or services using your cryptocurrency, that is technically treated as a sale of your cryptocurrency. So let's take the hypothetical earlier. I bought the one Bitcoin for $30,000. I held on to it for more than a year. And now I want to buy a car with my Bitcoin, which is now worth $50,000. That is going to be treated as a sale on the day I use that Bitcoin to purchase the car. So if the car dealership took if the car cost $50,000 and that's all they wanted was one Bitcoin, then I had a sale of that one Bitcoin on the day I bought the car. Does that make sense? I hope it does. In any case, those are your general transactions that are taxable and how you report those transactions. If you have any other questions about cryptocurrency transactions, reporting them, and how we can be of service, you can visit our website, lawharp.com, and book a general consultation for cryptocurrency matters. Again, that's lawharp.com. Thank you. I appreciate you, and I will talk to you again soon.